Good afternoon, it's Christian Thwaites from Brown Janikowski, Thursday, May 26th, just after the markets have closed. It's been a relatively good week for the markets. Oil has been up. Stocks have bounced nicely from a lull of a couple of weeks, and so we're up in that sort of 2100 trading range. And things still seem pretty confident right now. I'm going to just divert though from our normal narrative and talk to you a little bit about the stock market in election years. Obviously, we've had a lot of questions recently about what happens in election years typically, and this one is obviously a very unusual one given the state of the primaries and the two or maybe three different candidates we might see in November. So we went back and looked at what happened to the stock market in election years. And here's a slide, and don't worry about trying to read it too much because we'll post it up on our website. We went back to the last 16 elections and so tried to find what happened in the stock market in the 6 months prior to election day and then the 6 months after election day. And the news is that nothing really jumps out of this data. And whether you take it back to 1952, as in this case, or 1900, the data doesn't really change. Really what we're seeing is that up to the election, the market is generally stronger than it is in the 6 months after the election. Out of these 16 different cycles, there's only one negative down year, and that was in 2012. But I don't think it was anything to do with the election. It was all to do with the meltdown in the financial markets. And in the 6 months after, there are 6 negative periods. But again, at least 2 of these in 2000, and actually going back to the 70s in 2012, are much more driven by economic and valuation and even macroeconomic and geopolitical concerns than they are by the election cycle per se. So what do we take away from this? It behooves us to look at how the economy, how earnings, how valuations are doing rather than the election cycle itself. But this generally tell you that it's good to remain invested up until the election period, and that's the way we're structuring our portfolios currently. Thank you very much.